right. Hello, everyone, and welcome. Hope your week is off to a great start. My name is Jordan, and I'm with the customer experience team here at RightCapital. If you're listening to me now, then you're here for our Creating Your First Plan webinar. The goal for today is to walk you through how to build a financial plan from start to finish in RightCapital. So we'll cover the key steps you need to take, highlight a few best practices, and make sure you feel confident navigating the platform as you begin working with your clients. Along the way, we'll also show you how to customize your firm's branding, adjust your plan assumptions to better reflect your approach and I guess personal planning philosophy as well. Before we dive in, I see there's a couple people kind of making their way in here, so I'll take some time with this. Just some quick housekeeping notes. First off, the session is being recorded, and you'll get sent a copy after we're done. So if you miss anything or get pulled away, this will still be available. I also recommend if you're listening to this or watching this with the intention of working on a plan at the same time, just take the time, sit back, listen, absorb as much as you possibly can the first time around. And then again, about 30 minutes to an hour after the webinar is over, you're going to get an email with the recording. That way, when you're actually working on the plan, you can pause it, rewind it, fast forward, whatever. Makes it a lot easier. We're also going to have a Q&A at the very end. So please feel free to drop questions into the chat as we go. Accounting for time, I'll try and go through as many as I can. That being said, the way Zoom works, I can't see the questions until I'm done. I have to actually open like a separate window and then go through them. So if you have a question, again, great. Feel free to send it through. I'll make sure to get to it. Just make sure when you actually ask the question, you actually refer to what you're asking about. If you say something like, hey, can you do that again? I'm not going to know what you were talking about later. So just something to keep in mind. But with that being said, I think we're all set. So let me share my screen for everybody. Bear with me one moment here, and we can get started. So this first page I'm on here, I'm starting on the advisor portal. This is where you'll manage the core settings that shape your experience in RightCapital. This is also the first screen you should see upon logging in. You should just be brought directly to this Clients tab, and that should be it. And this area holds a lot of functionality. There's a lot of tabs at the top. But for right now, we're only going to focus on one, which is I'm going to go to this gear icon right here and then go to Account right there. And the reason I would start here is ultimately you can adjust some of these settings later. You don't have to do it immediately, but it is good to just take a quick look before you jump into your first plan because there are some settings that can affect how the plan works. You want to make sure that these kind of fit your personal philosophy before you get started. The last thing you want to do is set up a bunch of plans and then find out you're like, whoa, I really didn't like having that setting enabled, change it, and then it has an impact on the plan somewhere. So it is important that we go over that. Now, the Count tab here, you're going to find three tabs. You're going to find the Profile, Preferences, and Customization pages. Each of these is going to play an important role in how your account actually looks and functions for both you and specifically your clients. Because a big thing we're going to go over is you can't actually invite your clients to look at the specific plan or look at their specific plan, and it will affect how they see it as well. So these impact everything from report cover pages to your branding and invitation emails. So again, it's just important just to take a quick look through these and make sure it all looks good. So first tab is going to be Profile. Pretty basic. You're just going to enter just key details, things like your name, firm name, email, contact information. This information will automatically flow into the cover pages of your client reports. So it's a very good way to keep things polished and consistent. Again, just take a moment to review each field. All these details will end up being client facing. So if you never touch this and you start planning and then all of a sudden you're printing reports, they are going to look a little odd, especially on the first page, if these aren't set up. You can even get an option here for report disclosure. So if you have a custom disclosure you need to add to a report, you can do that as well. Super quickly, just going to hit on preferences. This is a much more niche page in terms of the impact. None of the settings here are essential or going to have a major impact. It's just good to take a quick look to see what's available. If you weren't sure what something means in here yet, that's totally okay. But these will become helpful later in your RightCapital journey. A good example here is that setting that says, create a college goal when a child is added. Essentially what this might do is help you reduce the amount of data entry you're doing later. If they have a kid in the plan, it'll automatically make a college goal for them. It's not a huge setting, Again, some of these are kind of like miscellaneous settings, but just something to keep in mind, later in your journey. As you're getting used to the software, you might want to just come back here, check on these settings, make sure they still work for you. So it's something to keep in mind. Another important one is this one right here. So do not automatically, list my clients on the advisor portal clients page. This makes it so you actually have to search for a client name for them to appear, especially if you do a lot of presentations in the software. Definitely a good setting to have so people can't just see your full client list. So definitely just a recommendation I make there. All right, last and probably most important tab here is going to be the customization tab. So this is where you can actually personalize the client experience and really your own experience by adding your firm's branding elements. So the first thing we'll start with is logos. So first off, you're going to see the option to upload a positive logo, which is typically one with a white background, and a negative logo, which is just a transparent file without a background. Now, if you're unsure which to use, chances are your marketing team or logo designer, whoever that is, can just help you find a transparent PNG, which generally works best here. Now, the reason the logo is important is that these appear in a number of different places. So this is going to appear on the login page. This is going to appear within the client portal. It's going to appear on your reports. So you don't have to use this. Again, it's not necessary. You're not going to hurt a plan, but just by not adding your logo. But obviously having your logo in there doesn't make it seem more as like part of your tech stack. The thing I always recommend is everyone has enough logins already. When you ask your client to start logging into their financial plan, that's another login they got to remember. They might forget what it's for, right? If they log in and see RightCapital, they're like, oh, what is RightCapital again? I don't remember what this is used for. But if it has your logo attached to it, they go, oh, it's for my advisor, right? It just kind of reduces the amount they have to keep track of. Again, might seem like a minor thing, but I definitely recommend taking the time to set up if you haven't. It is important. Now, the way this simply works, it's very easy. You just hover over this, press update. It'll allow you to drop the file in here. Now, there are some restrictions on the file you can upload to just give you an idea what that looks like. I'm not going to go through all of them, but if you go to this help page right here and click that, this will bring you to the help center. Now, this is helpful for anything. So pretty much anything you need help with on the system, I can guarantee there's at least one video or article related to it. That being said, in this case, I can just look up logo customization, just like that. There's an article right here, and it goes over, first of all, how to upload the logo and everything like that, but also what we're looking for in terms of the file. So this is something you can just send directly to a designer in your company. They should be able to handle this. If you have a logo that's pretty close but just needs small adjustments, like it just needs to be resized, excuse me, you can actually reach out to the RightCapital support team. They can take a look at your file and make small edits to it. They can't completely make you a new logo, but if you're just trying to resize it, they can help with that. So something to keep in mind. So again, I'm mentioning this for the logo. I'm going to mention the Help Center a few more times in this webinar. If you have any questions at all, I would definitely check out the Help Center first, take a look around, and there's always our support team available as well in case you need further help. Both absolutely fantastic resources, so just be aware that they're both available. Anyway, moving along here. So past the logo, you're also going to see something here called the branded login page. What this is essentially the URL your clients should use once they're set up in the software. So a pretty common question we would get is like, hey, I've invited my client to the program. They're able to log in and see it, but what actual URL should they use? What should they bookmark in their browser or anything like that? This is the one. So especially once you've provided your logo, when they use this URL, it's going to show your logo and not RightCapital. So definitely something important there. Next up is color theme. Pretty basic. You can just adjust the colors that are used in the software up here. So, if I went in, you can use a hex code. You can pick it like this. If I went in and said, okay, my firm uses like a dark greenish color, whatever, and I don't even know, maybe like wow, that, I really do not like how that looks. Let's go with that. Looks a little bit better. There we go. So let's say these are your firm colors. You could plug those in. I guess that kind of looks like Fidelity, but anyway, I'm getting sidetracked. Point is, this is just another further bit of customization. Again, just makes things look a little bit more custom and more like it's like your software, right? So it can definitely help. You don't have to do this. Again, plenty of advisors just leave it the way it is, but you have that option available if you'd really like to. At the very bottom here, we also have the email templates. So effectively, there's a couple here, actually a few technically. But the way these work, these are both sent depending on whether or not you've completed the client's data entry already. So if you've already entered all their info, they're going to get the client access invitation, right? So that's this top one right here. And if you're asking the client to complete the data entry themselves, they're going to get this one instead. So that way, when you invite a client, they will get a different email. We have these default ones set up, but if you wanted to go in and have this custom email that said like, hey, I'm inviting you to complete your data entry. Here's a video to help you out that I made and all sorts of stuff like that. You are more than welcome to do that. But it just splits it up. So when you're sending out that email, it actually makes sense and it's not giving them a bunch of info they may or may not need. So just something to keep in mind there. All right. The last one here, super quickly, is for Express clients. We're not going to get into those today. That's kind of a different level. We're not really heading on. But similar to the invitation invitation emails, if you make an Express client, this is the message they're going to receive when they log in. We're not really getting to that today, but just in case you're wondering, that's where that would appear. Now, super quickly, before we move on, I just want to quickly summarize all this. So super simple. If I go back to the top, the profile tab under the account section here feeds into your report cover pages, right? Preferences, controls, some more niche options that will make your time in the software a little bit easier, right? So just some basic settings here. Customization lets you upload logos, choose your brand color. You get the branded login page. You can pick the color theme, and you get those invitation email templates to kind of support your onboarding workflow, right? So very important. So again, getting these pieces in place early ensures that everything feels clean, cohesive, branded from the start. It just sets the tone for a more professional experience with the client. So it's definitely something important to keep in mind. Again, you do not have to use anything in customization or anything like that, but it is something that can go a long way. So it's something to think about. Now, the next section we're going to look at before we jump into actual data entry, I'm going to go to this 3-dot section here. This is called the More menu. And then I'm going to go to Assumptions right here. Now, quickly, the Assumptions tab, basically, these are some of the more important settings that kind of work in the background of the financial plan. So pretty important, this first one, asset return. This controls the global asset return assumptions. These are very important. So these are actually what dictate what returns we're getting in the system, right? So essentially what it's saying is if historical index returns are the global assumption I'm using for all client plans, then if a client has 100% large growth US equities, they will see roughly, this in dividends, capital gains, and returns, right? So very important to keep in mind. There is definitely a lot going on here. I've done independent webinars going over just everything in the assumptions tab. If you have any questions about what kind of differentiates this option from like forward-looking assumptions and how these work in more detail, I definitely, again, recommend checking the Help Center. There's a link right here that gets you in and gives you a description of what's going on. Alternatively, if you go to our webinars page in the Help Center and go to previously hosted webinars right here, we do actually have a recent webinar going over assumptions. So it should be in here. Let's see. Should be, yeah, so it's things related to a guide to model portfolios. There should be another one in here. I'll double check that because it should be pretty recent. But, oh, there it is. In-depth overview of asset return assumptions. So if you have any questions in regards to what actually goes into that, I would definitely check this webinar here. That's going to have a lot more information on that. Anyway, moving right along, I will get us to quickly inflation. Same idea. This is going to be the general setting for inflation across all client plans. As a note, these can all be changed within a client plan. So if you have a specific client that's like, hey, this should really be 3%, whatever, right? You can make that change within their client plan. It won't affect anybody else. These are just the default assumptions people are going to start with. So if you have a strong opinion on how one of these should look, great, jump in, change it, you're all set. That'll be the default moving forward. Lastly, miscellaneous, just a couple of miscellaneous assumptions here. It's things like the cost of purchasing a real estate property or selling one, the automatic expense adjustment upon the death of a co-client. So we're saying that when one client passes away, they're going to automatically lower their expenses by 15%. Some basic stuff here. There's also some options to control how the Monte Carlo works and things like that. Again, I'm not going to get too in-depth on that today. But if you have more questions, I definitely recommend checking out the Help Center right here. But anyway, with all that in mind, those are definitely the two places I recommend jumping in before you get to an actual client plan. And actually, one more while we're here. Another one to check super quickly is integrations. Now, again, I'm not going to spend a lot of time here. The reason these are important is that these can really streamline the data entry process for plan creation with direct data feeds. So integrations will just reduce the time it takes to create and update client plans. So there's a lot of them here as I scroll through. What I recommend is just come in, take a look at the list. If there's anything you work with on a regular basis, like maybe you hold a bunch of different client assets with Fidelity, I definitely recommend jumping in, checking out the Help Center article that'll be available right here, see what it can do for you, because some of these can save you a ton of time. Some of these can automatically bring in tons and tons of client accounts and make sure that you're not manually entering those every single time. They stay up to date. So that can definitely be super important. So again, not spending a lot of time here, but I definitely just recommend you jump in, take a look at this list, see if there's anything helpful for you, and then kind of move on from there. Now, all of that being said, those are the things I recommend jumping through before you get started. But now we can actually create a new client plan. So what I'm going to do, very simple. I'm going to just go to the client tab here. Again, this is the first tab we should see as soon as you open the software. And then I'm just going to go to this button right here, add a new client, select that, and I can start putting in their information. So every time I do one of these, I end up checking my bookshelf to see what I've got available here. Let's go with, let's see. We've got a Michael Lewis book on here. Why don't we do that? So I'll make this my Michael Lewis plan. I read through Liar's Poker a couple months ago, which was a fantastic book. I'm not sure if he has a spouse, what their name is. So I'll just leave that blank, but we can go with that. We'll go with Michael Lewis today. Anyway, now one thing I'll mention here, we're going to be doing the data entry from scratch today. Obviously I want to kind of go over how that process works. If you were trying to invite a client to work on their plan from the get-go, the way you would do it is you could actually enter their email address here. So I could say like, hey, Lewis at, liarspoker.com or something like that. Well, I cannot type today. There we go. I could put in his email, send that to him, right? And then he would have access to the data entry process instead of me. I could just click that option right here. Instead, today, obviously, we're going to do it. So all I'm going to do is press start right there. And I'll get the plan started. And we should, if you give it a second, there we go, get brought to the first thing you should see whenever you're working on a plan, which is the 6 steps of data entry. So we're going to go through each one of these steps today. We're not going to go over every single option in every single one of these. There's definitely a lot of data entry to be had in these 6 steps. But I'm going to go through a lot of the popular items and just give you an idea of what this process looks like. You might not be an expert by the time you finish today, but you should hopefully feel a lot more comfortable getting through these. Excuse me. So, first step, family. Pretty basic. We just need to know who's in the plan, right? If you add a ton of assets and there's only one person in the plan, it doesn't matter how many people are in the plan. We're always going to attribute to that one person. So it's just important to go through, make sure we know who's in the plan from the start. When you actually start the plan, assuming you have 2 clients, they will start with cards in the family section. When I say card, I mean any one of these item boxes here. So for example, this would be the client card. This would be the co-client card, right? Anytime you hear me say card, I'm talking about one of these specific data entry items. So just as a reference. Now, what I can do, I have this client card. I'm actually just going to open this up, right? So I can pull this up directly. I can say, okay, this is their name, have all this information in it. The thing I'm worried about here are these 3 items at the bottom. So first of all, I need to know how old they are. I need to know what their planning horizon is, aka when we think they're going to pass away. 90 is the default. That's what I'm going to stick with today. But again, if you have a plan that's ending really early and you're not sure why, it's probably because of the planning horizon. And then you need to set their residence state. So this is actually important. We do calculate state taxes within RightCapital. So if you have the wrong town or wrong city selected, that can matter. So for example, if I had them living in Florida, right, but I had them set to New York, their state taxes are going to be considerably higher, right? So that is something to keep in mind. I'm going to leave it as New York for now, but just something that's important. Same thing for co-client, need to check their birthday and their planning horizon. Because they're the co-client, we're going to assume they live in the same home. So that is something more to keep in mind with that. Now, From here, I can add additional participants. The one I'm going to focus on today is a child. So let's say if I open this up, let's say this is, yeah, I guess just child Lewis in this case. Their birthday, let's say, we'll go a few years back. So we'll say, maybe not like that. There we go. We'll say they were born in, let's say 2010. So that way we can go over a little bit of college funding. Let's just say they were born in June of 2010 for whatever reason. They are a dependent, so we will have to pay for them. We will get some tax benefits out of that. Great. Press save. Now we have a child in the plan. Very simple, right? And that's really it for family. Again, nothing too complicated here. We're just making sure, like, hey, who are these people? Where do they live? How long do we think the plan's going to go? And how old are they? Pretty basic stuff with the financial plan. All right, so what I'm going to do, now that this is all done, I'm going to click next. That'll bring us to income. So this is the first kind of traditional data entry section where we actually have to pull on some additional information here. The first item or first cards will be for salary. So for each client in the plan that's not a dependent, they will start with a salary card, right? So Michael here will start with a salary card. What I can do, I can actually click this open and just get started, right? So right here, I can go to annual amount. Let's say it's a little bit later in his career. Let's say he's making, let's just say $150,000 a year, right? I can plug that in. Michael is the one making this money. The income has already started, right? And the income will end at their retirement. One quick thing I'm going to recommend here. Some people are really like putting in the specific year. They want to make sure, like they say, oh, calendar year 2050 is exactly when they want to retire. I do actually recommend not doing that. And the reason is we're going to set their retirement date later. What we can then do is if we ever have a proposed plan where we need to change their retirement date, we can just change the retirement date, right? And then all these other cards that are set to the end at their retirement will change with them. If we set a specific year and then later down the line, we want to change the retirement date, maybe they're like, I want to work another extra year. I could really use the money. What we'd have to do is change the retirement date and then go back into every single one of these cards and change the calendar year again. So, it can be helpful. For example, if they were only going to make this money for like 5 years, you could plug that in. But generally, if we think they're just going to stop making money when they retire, I just recommend using that. I know that's a big caveat I just added in there or extra note, but you'd be surprised at the amount of times that causes an issue. So I definitely recommend sticking with this unless you have to. Anyway, with this is done, I can press save and it's right there. So now we have them making $150,000 in the plan. Very nice. Same thing for the co-client. I can go in. Let's say they make it a little bit less. I'll just make it a flat $100,000. Great. Press save. Boom. It's in there. So now they're making a combined $250,000 a year from their salaries. Very simple. Now, the other cards you'll see automatically here are the Social Security cards. These are a little bit more detailed. These are a little bit harder to understand from the get-go, so I'll just go through these super quickly. Everyone has to deal with Social Security at some point, or most people. So what I can do is click this card open. This is for Michael's Social Security, right? Pretty simple to start. It's going to ask us some pretty basic stuff like their filing age, so when they plan on actually taking that money. I can specify it as a month if I use one of these other options, right? But then it has this thing right here where it says estimated benefit amount. Now, the one thing I do want to mention, if they're already receiving Social Security, you can just click this and just plug in a monthly amount. That makes it very easy to work with. No trouble there, right? But if they're not already receiving, we do have to kind of calculate that number in some way, right? And there's 3 main ways we do it. The first is, I guess I should say as an additional option, you can't just turn Social Security off. So if for whatever reason they're not going to receive those payments, you can just shut it off, press save, don't worry about it, right? But generally, there's going to be 3 options for most people. The first is use simple estimate. This is the least data intensive. Pretty much what it's doing is it just takes the salary number and it just bases the calculation on that, right? So this is typically better for younger clients. For example, if you have a client who's like 30, we have no idea what they're going to make from Social Security. There's just not enough information for that. They haven't even gone through most of their career. There's no way we'd be able to be 100% with that. So what we do is we just take whatever they're making now and kind of increase it over time by a general inflation rate. And that's what we're going to kind of base that calculation on. So it's not perfect by any means, but generally it needs less data. So the younger the client, the better this is going to be. Now, that being said, not every client that is that young, obviously. So the next best option is based on Social Security statement value. So the way this works is once we have an actual Social Security statement, we can use that amount as the calculation, right? So we can plug it in and say, hey, they're making $500 a month from Social Security or whatever it is they're making, right? And we can base the rest of the calculation off of that. So again, you need a little bit more information. You need that Social Security statement, which not everybody's going to have, obviously. But if you have it available, it is much more accurate than using the simple estimates. So that's definitely something we recommend. Next up is based on historical covered earning. This is really intensive. This needs you to actually go through and put in these incomes year by year. So if someone has a really strange income history, this can be helpful. Maybe there's big gaps in certain years or whatever, right? That can be helpful. But obviously this needs the most data. So I didn't see this one used super often. Generally, it was going to be one of these two. But this is how we do the basic calculation for Social Security, right? You have already receiving, you have simple estimate, and you have based on SS statement value. So you have three pretty easy options there. The way I used to describe it, use simple estimates good for younger clients. Based on SS statement value is better for older clients. And if they're already getting it, click that. You're all set, right? So pretty basic to kind of follow from there. And for both clients, they're both going to have these options, right? So if I come in here, right, they both have all these options set up. I can just press save. Boom, filing age is the same. We're all set. Now, I can also add additional income sources. Obviously, this does not cover every type of income somebody can have. So I can go to add income. There's a number of different options in here. I'm not going to go through all of these, right? So there's a ton of different options, including other income. Other income also has some miscellaneous taxable income. So for example, if I had like Social Security disability, I could set that to Social Security, plug that amount in, I'm all set. In this case, what I'll do, I can go here, add income. And, well, Michael Lewis is an author, right? So I can put in a royalty. Let's say he makes, probably not nearly enough, but let's just say $15,000, right? Whatever, that's what they make. He's going to get that, until the end of the plan. And it's only going to increase by 1% or something like that, right? Income starts this year, press save, boom, we've got royalty income. It's that simple. Obviously, someone might have really complicated forms of income, but generally, this is a pretty easy process to get the incomes in there. All right, next up is going to be savings. So, really important note to make about this section. Step 3, savings, is not looking at the account balances, right? So, what I don't want to do is come in here and set this 401k card, for example, to like $400,000, whatever the value of their 401k is, right? That will be done in net worth. We're going to go over all the current balances of their accounts in net worth. That'll be taken care of. What savings is looking at is their contributions. So if they're retired and they're not doing savings anymore, you might just completely skip this tab, right? If they're not saving any money, even to like a grandkid's 529 or something, great. Move past step 3, doesn't matter, right? You might not even touch it if it's an already retired client and they're not saving any money. Now, most clients maybe are not that way, right? They're still working, they're saving for retirement, so it is important to set these up. That being said, they work pretty similarly to something like the income cards, right? So what I can do, this first one, taxable, pretty simple. I can open this up. This will be for any like brokerage savings they have, and I can just come in and say, hey, every month or every year, excuse me, they contribute $10,000 to their brokerage. Starting now, all the way to the end of retirement. Michael's the one who does this. Actually, I'll set it to joint. We'll say they jointly do that. Maybe I'll increase it a little bit because of that. Set it to 15,000. Set that, press save, done. Now they contribute $15,000 their income to their brokerage account every single year. Very simple. Next up, we got 401k. This one's a little bit more in depth because it's got match information. It looks intimidating. I promise you it's very easy. Same thing I'm going to do here. I'm actually got some different options for the target. So I can do percent of salary income, an annual dollar amount, or a maximum contribution, right? In this case, I'll just leave it to percent of salary income and say, you know what? He contributes 10% of his salary to his 401k. Very simple, right? Savings starts now, savings ends at retirement. Good. Next up, I have everything under this line. Excuse me, the way I should put it. Everything under this line is going to be related to the match information. So for example, if the employer is contributing 100% up to 3%, and then maybe like a common one is like, I don't know, 50% up to 5, right? I can plug that in, and great, that will keep track of their match information. Additionally, I have options for a flat percent match or flat dollar match. These are really for your cases where they're not really matching the contribution so much as they're matching their salary. So for example, if the let's say the employer had a rule that said, hey, no matter what, regardless of whether you contribute or not, we're always going to contribute 5% of your 401k or 5% of your salary to your 401k, right? What I could do, come in here, set that to 5%. Oh, excuse me, set that to 5%. There we go. And we're done, right? I could do the same thing for flat dollar match. It's the same idea, just as a flat dollar amount. And lastly, we have percent of match to Roth. This can be easily confused. This is not for the employee's contribution. So this is not from the 10% we set up here. This is for the employer. So this is important for in a case where, let's say, 50% of all of the employer match goes to a Roth account, right? However, Michael here does not contribute to his own Roth 401k. So instead of making a Roth 401k card and creating the match information and leaving the contribution blank, I can set up all the match information in here, come down here, set the match to 50%. And now 50% of whatever the employer puts in automatically will go to a Roth 401k instead of a traditional. So again, little confusing. I'll do it in a different way just so we can see it again. So we'll go to the co-client's 401k. Maybe let's say this is a little bit more basic. They have an annual dollar amount of, they only contribute, let's say $10,000. I think that comes out to 10% anyway. So they contribute $10,000, right? They're the ones contributing. It's an annual dollar amount. Saving starts now, goes until retirement. Let's just say they don't get a primary match, right? They don't get matched based on their contributions, but their employer says, hey, no matter what, you're going to get a match of 10% of your income. So regardless of whether you're contributing or not, we're going to contribute 10% of your salary to your 401k, right? I can just say, hey, if let's say $2,000 worth of that, right? Because it's going to be about a $10,000 employer match. $2,000 of that goes to Roth. What I can just do, go down to here, set it to 20%, we're done, right? And basically what this would mean is like, hey, they're contributing $10,000. The employer is contributing 10% of their salary, right? And 100% of the match will go, or excuse me, 20% of the match will go to the Roth accounts to the traditional. So that way 8,000 is going to their 401k from the employer, and the other 20% is going to their Roth 401k. So there's definitely a bunch of options here to keep it flexible, but generally it's going to be pretty simple. Most of them are going to just look like this, right? This is going to cover most of your 401ks. You just have these additional options here for those more uncommon scenarios. But that's really it for savings. I mean, what I can do here, I can go to add savings, right? There's a ton of different options in here I could go through. Again, I'm not going to go through all of them, but there's tons of different options for savings. In fact, one thing I can do, let's just say they also have a Roth IRA. They contribute the maximum contribution amount for that every year, right? They're doing it from now all the way to the end of retirement. Michael's the one doing it, right? Because there's an individual account. Press save, boom, it's in there. He's contributing, $7,000 a year, whatever it is now, and we're all set. So again, savings overall pretty basic. There's nothing super complicated in here, so you won't get too lost when you're setting up the savings. Now, next section. So our next section is going to be net worth. This is definitely a little bit more difficult than the other sections. This deals with a lot more information than the other sections do. So I'll take this point by point. Excuse me. I'm not going to go through every single section here. I'm not going to hit on stuff like stock plan. It's just a little bit too complicated for an intro for data entry. But we'll get through a lot of it. Again, it looks more complicated than it is, I promise. So the first thing you'll see at the very top is I can actually choose to link an account or add an account. So one thing I'll mention is if you remember from earlier, I pointed out the integrations. So let's say you set up the, let's say the Fidelity integration because you have a bunch of client accounts that are held through them, right? What you could do is you could set that Fidelity integration. And then during this data entry process, what you would see is this would actually be a drop down. I could choose Fidelity, and this is where I could actually link their accounts directly from Fidelity into their net worth, right? So again, not going to go too in depth on that today, but if you have that option available, it's definitely good to look into because that can save you a ton of time. Because I don't have one of these integrations, I have to set up this client's investment details manually versus I could just have up-to-date investment holdings brought into the system automatically through that integration. So, it definitely takes, most of them take like a couple of days to set up. But once they're set up, I promise you it will save you so much time. So again, definitely a good thing to go check that out. Additionally, because I'm on a premium account, this is not available on basic, but it is available on premium. You can also link accounts through just aggregation. This is more meant for clients. So if a client had access to the software, what they'd be able to do is actually log in, do their data entry, and then actually be able to link one of their accounts. So to give you an example, if this client had Chase, what they could do is, as long as I invited them to the plan, they could log in, go to the network section, press link account, add their Chase accounts. So if I click this, it would actually ask them to put in their login, right? I'm not going to go through this whole process, but when I click that, it'll bring you to the Chase website so they can log in, right? And then once they're done, they can actually choose to link something like their bank account, their credit card, and we can automatically bring in that information. Again, just possibly cuts out some data entry, so that can be super helpful. The only note I'm going to throw in there, not all institutions build their websites equally, right? So something like Chase is going to work pretty well. In fact, I personally use Chase. I've linked it to my RightCapital account. It's worked for 2 years with no problems. It has never asked me to log in even one time. It is always updated the previous day. Never had an issue with it. But if your client is logging into something like a local credit union, which might have a credit card, chances are that might not be as good of a connection, right? It might take longer for it to update. If they update their website, it might take it longer for it to get fixed, stuff like that, right? It might be harder to link it in the first place because they need more information or whatever. So something to keep in mind. Generally, my rule of thumb with aggregation is like, look, as long as it's a large institution, you're going to generally do pretty good with it. But if you're linking some pretty niche institutions that aren't used very often, chances are they're going to run into more issues. So just keep that in mind when you're using that. But anyway, moving on, what I just want to hit on is how we want to do the rest of the data entry for the network section, right? So outside of all those linking options, we can, of course, just add an account manually. So again, I'm not going to go through all of these, but I'm going to go through some popular ones, just giving you an idea how this process works. So let's say this client has emergency savings in cash. So what I could do is I could go to add account, bank, add that, right? And I could say, hey, this is owned by both clients. This is a savings account. I can even call it like emergency savings, right? Go to balance and just say, okay, they got $10,000 in emergency savings. Press save. There it goes. You can see their total net worth value is going up. They have $10,000 in cash. We're all set. I could add another one. I could go to bank, set it to checking. Say this is like the joint checking account for the house. Go in here, set this to, I don't know, $4,000 or something like that. Press save. Done. Right? So that's also an option we have available in here. Now, this is pretty easy. This is just cash. This is going to grow at cash rates. There's nothing too complicated here. The next level of detail is going to be investments, right? This is kind of the main important part of net worth. So what I can do, I can go to add account, scroll down to investment, and now I can start the process of adding an investment account. Now, obviously, investment accounts have a lot more information. When I'm adding a bank account, it's really just cash. It's going to grow at cash rates. That goes all the way back to the return assumptions we looked at earlier. It's nothing too complicated there. Investments, obviously, there's a lot more going on, right? So what I can do with investment, let's add this investment account. And we know from a fact from saving contributions from earlier that they do have a taxable account. It is jointly owned, so I want to make sure I have that. But I'm just going to throw in something here like this is their brokerage account, right? Very simple. So I plug that in, right? And what I can do is there's two main types of entry methods for the account information. The first one is just enter total balance. The way this works, it's very simple. I just come in here, type in the total balance, type how much cost basis they have. I'll say it's just half, 50%. It's probably a little bit low, but whatever. Plug that in. And then by clicking this section right here, asset allocation, I can actually say what the account is. So on one hand, I can come in here, I could type in the percentage and say, oh, this is 50% large growth. It's, I don't know, 20% mid cap, and then it's, 30% government bonds or something like that, right? And that would get us a full allocation, 70-30 split. You could do it this way if you wanted it really general. Additionally, you can pull these based on a model portfolio. So we have some defaults from preservation to most aggressive. But as you can see here, you can actually make custom ones as well. So there's something to keep in mind. In this case, I'm just going to leave it at aggressive. That's kind of like a pre-built model portfolio we have. Pretty typical 80-20 account split. Press save. And we're done, right? That's all it took, right? So I have the number in there. I have its allocation to show how it's going to get returns later in the plan. And when I press save, it's in there. It's being added to our total net worth. That's it, right? So especially if you're rushing through the data entry, this is pretty quick, right? You plug in the balance, you plug in the cost basis, you get the allocation, press save, you're done. Now, it's not too bad, assuming you have all the information in front of you. However, there is another way to do it. I'll do this for the 401k. If I go to add account and then investment, so same thing, I can change the account type, right? So we'll say this is going to be for Michael's 401k. So what I can do is go to account type, select this. Now, as you can see, there are a ton of different options. I'm not going to get through all of these today, but most of them are pretty similar. They work pretty similar to one another. So what I can do here, I can select 401k, right? That's in there. I'm going to switch this one to enter holding / asset class, right? So I can switch that one. You'll notice that the total balance field goes away. That's not available. Instead, what I can do is actually plug in this information manually. So what I can do, I can go to add holdings, click that. It'll actually pull up a specific security, and I can say like, hey, I want this to have Apple stock. Maybe their 401k is a bunch of Apple stock. I'll plug in that they have, I don't know, 75 shares Apple, press save, and we will actually pull the current price of that from Morningstar. Price of that holding, I should mention, from Morningstar, and then plug in the value. We're also going to pull in the allocation information of that stock, which will then contribute to the over allocation to the account, right? So I could keep going. I could do this and say, hey, they got VU, right? They got, I don't know, 50 shares of that. Save, add holding. They've got, I'm just going to add a bunch of different ones here. SPY, great. 50, save, great. They got a ton of different cash in that. And now, it's very aggressive, right? But they do have an account with a total of $85,000 in, I guess really the S&P 500. But we can do it that way, right? As long as you have a holding that can be tracked by Morningstar, you can plug in the holding individually, and we will actually pull that information. It's updated every day, so it stays pretty current. Obviously, the detractor from this is you have to add it manually. This isn't going to change on its own, so you would have to come in and plug these in. Another kind of shout out to integrations and account aggregation, which can kind of cut that process out. But if you know exactly what's in an account, this is definitely not a bad way to set that up. Additionally, if there's a general, for example, if you put in a holding and there's no option for it, maybe it's like a weird fund that Morningstar doesn't have available, it can't track it automatically, you can always just go to add asset class and just add like a strict asset class from the return assumption. So for example, if I want to cash in here, I could just go to cash, say it has, $5,000 worth of cash in the 401k, press save, and we're good, right? I could also say you've got some government bonds. I don't know what they are. I don't have a ticker for it. Great, go to government. Let's say they've got, I don't know, $25,000 worth of government bonds in here. Press save. Those are in there as well. You can see it's keeping the allocation updated, right? So when I click that, I can see generally what the account's made up of. Press save, right? And we're all set. Now we got that account in there. So that's definitely an easier way to do it, depending on what you got. Another way to do it, if I go to add account, back to investment, we got to add that other 401k in, right, for our co-client. So I'll add that in. When I'm doing the enter holding / asset class option, you may have noticed there's this little drop down here. I can actually upload holdings from an Excel sheet. So if you have their holdings for an account built in Excel, right, as long as they have this information available, we're able to bring those in. In fact, we don't even need all of these, right? We don't need price, we don't need value, we don't need cost basis. If you just have the name of the security and the quantity, we're able to pull those in from Excel and just automatically bring them into the plan. So especially if you have their accounts built out like that, that's definitely a lot easier. That's another way to do it. For this account though, I'm just going to keep it simple. I'm going to go to enter total balance. I'm going to plug in, $150,000. I'm going to say that this is I don't know, let's say moderate for retirement accounts, press save, and now it's just in there, right? So very simple. Again, there's a ton of different options for investments. As if I go back super quickly, right, there are tons of different investment account options in here. But again, they all look pretty similar. For that Roth IRA I set up, I could go here, plug in the total balance. Let's just say it's like, I don't know, $24,000. Set it to aggressive or something just like that, press save, I'm done. Again, I know what I'm doing, so I'm able to do that quickly, but once you get familiar with it, it's very easy to plug these accounts in, especially if you just have the information on hand. So that definitely makes it a lot simpler. Now, obviously, that is not the only type of account we can plug into the net worth. If I scroll down to property, I'm going to skip loan for a second. we can actually enter home information. Now, if you'll notice, I didn't add a primary home to the system. It was already just here. Primary home will always be in a plan to start. We cannot assume the client does not have a primary home. So they will always start out with one that is set as rented, right? I could just plug in the monthly rent. They could put that in, or maybe not that high. There we go. Maybe they paid $2,500 a month in rent, right? I could plug that in. I'm done. In this case, I'm going to say they own their own home. So I can go here, click that, switch it to own, and now I can actually plug in the details of their primary home, right? And I could say like, hey, they purchased their home for, I don't know, $450,000. It's currently worth, maybe it's been a few years. It probably jumped up quite a bit. Let's just say let's say it's 800,000 now, right? They did pretty well during COVID. Appreciates 3% every year. Property taxes, I don't even know what that would be. Let's just say that's a little bit high. Let's say like $8,000 a year. Insurance, they pay, I don't know, $3,000. Maintenance is $5,000. I'm just plugging in random numbers here, right? Probably got all that in. Save. Property is now added to their net worth. Now, if you'll notice, I did not plug in a mortgage. That's going to be done under loan, right? So what I can do, I have this property, but let's assume they're actually paying for it. I can go to add account. I can go to loan. And as soon as I add that, the default option is just going to be mortgage, right? Very simple. I'll make it a joint mortgage. And I can just say, hey, what was the original amount? I had their original purchase amount at $450. So let's say they paid $400, or I got a $400,000 loan starting in 2010. Not sure what the interest rates were at that time, but let's just say it's like 4%, 30-year loan. Now, if you don't know what the monthly payment is, there's actually a trick for that. I'll show you what that is in a second. But let's say they're about 15 years through, right? So let's say original amount. Let's say they're 200,000. We'll just plug it about halfway through, right? Maybe it's a little bit less than that, but whatever. Maybe they got behind on their payments. Plug that in. I can actually link this mortgage to their primary home, right? Now, again, I don't have the monthly payment information in here, but when I press save, it's actually going to calculate their minimum payment. So when I click back in, I can see, great, the minimum payment on this would be $1,900. And let's just say they pay $2,000 flat every month, a little bit higher than that. Press save. Whichever is higher is the payment we're going to go with. And now we have their home and their mortgage. So we're netting about $600,000 off this home in the total net worth value. So very important. Now, I could keep going. I am, getting to time a little bit. I still got to talk about expenses and goals. So I'm not going to go through the rest of them. The only other thing I'll mention super quickly is there is an option for other. Other includes things like lifestyle assets, aka stuff like cars. So I could go in and say like, hey, he's got a car worth $20,000. They have it fully paid off. Great. It's actually going to decline in value by, I don't know, 5% every year, right? I could put in, hey, this is Michael's car. Great. It's going to sell in 5 years. Press save. Boom. There we go. We got a car in there as well. So you can add other assets in there. I've seen people put crazy stuff in there. Comic book collections, gold. I've seen boats. I saw a postage stamp collection one time. So there's definitely a lot of stuff you can throw in there, but anything you think they're going to get value for later in a plan, you can definitely enter there. So something to think about as well. But that really does it for the net worth section. Again, the main important thing to focus on here is this is all their current assets. So again, we're not plugging their investment accounts and savings or anything like that. Whatever they currently have in their net worth is what's going to be entered here. So their home, their loans, their mortgages, whatever, their investment accounts, their bank accounts. If you want to do credit card balances, you can do that as well. Stock plans, insurance plans, all sorts of stuff, right? So you can definitely go through quite a bit of these. Again, I definitely recommend spending some time here. I'm definitely skipping over quite a bit. It is an important section, but for time, I got to keep going. All right, the next section is expenses. There's not that much to go over here. This is really miscellaneous expenses. Expenses and goals are both outflows in the plan. Some people ask the question of like, why do you even bother separating expenses and goals? The way I describe it is that expenses is kind of like the miscellaneous stuff. It's your day-to-day normal expenses. Goals are the things you really build the plan around, right? It's things like college goals. It's retirement. It's retirement health cost. It's vacations. It's weddings. It's cars, right? It's all those things you want to build a plan around. Meanwhile, expenses is just like, what do we have to pay to stay alive, right? That's basically it at the end of the day. So the default card, as soon as you get in here, as you can see, pre-retirement living expenses. There's going to be a post-retirement living expenses card in a minute, so don't worry about that. But for pre-retirement living expenses, I can open this up and say, yep, monthly expenses, they pay, I don't know, $4,000 a month, right? Now, something super important here, and it even mentions it right here. The living expenses you're entering here should be after all the expenses you entered in net worth. So, for example, I already entered the mortgage in net worth, if you remember, right? You have a $2,000 payment on the mortgage every month. What I don't want to do is say, hey, their total expenses every month with the mortgage is $6,000. Because what I'm actually doing is doubling up on that mortgage payment. What I actually want to do is go, hey, I already entered the mortgage in the net worth. It's going to keep track of that expense. So I should dumb this down to 4,000. So this is whatever was not entered in the net worth. Now I used mortgage as an example, but if they got other debt payments, insurance premiums, whatever, those also shouldn't be included in there. I've seen, credit card payment or credit card payment shouldn't be included in there if you've already got them in a net worth. So again, this is everything else. Typically, if you look at a person's plan and go, whoa, their expenses are way too high, what's going on? I would always check this number and make sure you're not double counting something, because that is usually the number one issue with overspending, is that we double counted something somewhere. So definitely something to think about. But that's really it for living expenses. I plug in the monthly amount, press save, boom, we've got our expenses every month. Pretty simple. The only other card here is tax and fees. This is, again, some miscellaneous items. So this is things like what's their filing status, is there any local tax we should know about? So, for example, if they have like a municipal tax in a city, this is where you would typically plug that in. Also, like, do they have an average advisory fee for all their investment accounts? There's other ways to do this, but this is a very basic way if you just are managing all their accounts. And that's basically it. There are also other expenses in here. So like one-off medical payments, alimony, maybe you want to do extra payments on the debt. So maybe, for example, I'll give you an example here. So let's say Michael gets a bonus next year for $5,000, and he's like, you know what? I want to take $1,000 and just throw it into the mortgage, right? So I could leave that at 1,000, right? Set the owner as Michael, put the debt or put the payment towards the mortgage. Say it's one time. It's going to happen next year. Save. That way, if they get their bonus next year or whatever, right, $1,000 of that, it would just go directly into their mortgage principal amount. So pretty easy setup there. Now, as I mentioned, the next section, goals, is a little bit more important. They're both out, like I mentioned, expenses and goals are both outflows, but goals is definitely those more important outflows. So I'm going to spend a little bit of time here before we get finished up. So first off, this is where we're going to set the retirement age. So if you remember, I mentioned earlier, setting everything typically to want to end at retirement age, like their income and savings. This is why, because now there's one place we can just set their retirement ages. In this case, I'm just going to leave it at 67 for both of them, press save. And now when they hit 67, all these other cards from income and savings will just automatically stop. So that definitely makes that process a lot easier. With that, we also have the retirement expense card. So if you remember, we just did the pre-retirement expense card. Now we have the post-retirement expenses, right? So I can come in here, set this to the same amount. Now we are going to increase this with inflation. So if your assumption is that their spending is going to stay the same, right? You just want to plug into the same number. If I automatically inflate this for them, then this number is going to inflate. And when they get to retirement, you're going to see a massive jump in their spending. So just keep in mind, this will also grow with inflation. So if they're going to keep their spending the same, just leave it as the same number. That one's pretty simple. Next up is annual retirement health costs. This is very similar to the Social Security card, where it kind of gives you different options based on how much information you have. The default is national average. So the annual healthcare costs for this client will be based on a Fidelity study. In this case, that equals about $6,300 is the average health cost for retirees. However, there are additional options. I could use the detailed estimate. This will take their actual AGI, right, and calculate their Medicare Part B and D premiums if they need them. You could also plug in a pre-Medicare amount and an out-of-pocket amount. So again, the more details you have, the better this is going to be. And then lastly, you can just switch it to a customized amount. So if they're already retired, we already know what it is. I could just go in and say, hey, they pay $5,000 a month or $5,000 a year. We're done, all set, right? So very, very simple there. In this case, I'm just going to leave it at national average. Again, the younger the client is, the more likely you're going to have to use that option. I could do a separate one for the Coke line here. Lastly is long-term care costs or LTC costs. If I open this up, again, we're just trying to get an idea of how much LTC was cost. So I could set how many years at the end of the plan LTC will be occurring. I could use a number of different national averages for the most popular types of care, or just plug in a customized amount. And I can also have a stop the normal retirement living expenses when the last LTC event starts. So we're not double counting if someone's been put into a home or something like that, and they're no longer spending the same amount of money they were before. So definitely something important to keep in mind. Again, you don't need an LTC cost for every single plan, but they are important. So it is something good to plan for. And that really does it for most of goals. Again, there's other items we can throw in here. So for example, because we have a child, it's automatically going to enter in something like a college goal, right? So I could set up how much this might cost in the future, right? So when the kid's 18 to 21, every year they're going to have to pay this for college. I could go and say like, hey, they're getting $10,000 in scholarships or whatever. Great, press save. And now, the parents would be responsible for that amount. Additionally, if I go to add goal, there are tons of different options in here. I could show them buying a car. I could show them going on vacation, purchasing a wedding, or contributing to a wedding. I could show them moving or buying additional properties, right? Different types of asset purchases. To give you a small idea, I can go to car and say like, hey, because I think I have them buying a new car in about 5 years. So I could say like, hey, in 2031, they're going to buy a new car for $30,000, right? It's going to be a one-time thing. They're going to lease it, or excuse me, finance it, right? They're going to put a down payment of 25%. They're going to, you get a loan term of 3 years, interest rate of 5%. I think interest rates are sitting at about 5.9, but let's assume it goes a little bit further down. And then this will increase with inflation. So by the time they actually do buy the car in a few years, it'll be like 33,000 or something like that. It's a little bit different. But ultimately, I can plug that in. And now they have a goal to buy a car in a few years within their plan. So again, expenses and goals, they're both outflows, right? But generally, expenses, miscellaneous stuff, just regular day-to-day payments like groceries and bills, right? And goals are your big ticket items. It's, contributing to a kid's wedding. It's paying for their college. It's going on vacation every year, stuff like that. It's the big stuff we want to plan around. That's why we break it up. But with that being said, that's really the full data entry process. So what I can do is just press complete. This will then bring us to the rest of the software. Now, I don't have time to go through the rest of this today. Just a couple quick things I'm going to say here. The first is once I press complete, I cannot revert back to that 6 steps of data entry process. So once I've done that, that's it. I'm never getting back to that screen again. That being said, all of those data entry items are now just available in the profile. So if I go through, it's all the same data entry items. It's in a slightly different order, right? They're not in the same order from before, but all these data entry items are available in the profile. So if I miss something, I can absolutely go back and edit them. It's just not going to be in that same setup. So it's going to look a little bit different. Additionally, you may be confused on kind of what the next steps are. If you are confused, my recommendation is to go to retirement. I'm not going to go over that today. I just don't have time. We're at the top of the hour. But retirement is where I would recommend going to next. This is where you're going to start seeing the output for the plan. This is where you can build alternative planning scenarios. Again, I can't go through that. I would definitely check out the Help Center for more information on that. I would check in with the support team for more information. But if you need a next step after you've done the initial data entry process, I just recommend jumping over to retirement analysis and going through those options. So very, very important there.